Let me welcome on board Saurabh Gupta, the CFO at Dixon Technologies, joining in on the show right now. Saurabh, hi, morning. Good to have you today on ET Now. Channel checks are suggesting that the demand had cooled off. Now, can you see an uptick, and is it now reflective in your order book?
Yeah, so you're absolutely right. Demand across categories is not that buoyant. Especially, we are seeing a slowdown in demand and on the TV side as well as on the mobile side. But I think so. We have been doing well because incrementally we have been adding more customers, and some of the customers that we manufacture for are still doing well in the marketplace. But overall, industry demand, at least in these two segments, looks slightly muted. But we are hopeful that the demand should pick up and we should have a good festive season ahead.
Let me talk about the lighting segment then, because we've seen margins recover a bit, but they still seem to be relatively a little low. With commodity prices now easing off, what is then the outlook on margins when it comes to the lighting segment in particular?
Yeah, so both the lighting and washing machine segment, you are absolutely right. The prices of commodity costs and the input costs have been coming down significantly, which will of course have a positive impact on our margins going forward. If you look at our performance in Q1 against Q4 or Q3 of last year, there has been improvement in margins quarter on quarter, and we see that improving in this current quarter and in upcoming quarters as well. So that is really positive. And they're also, especially in washing machine, we have been doing really well. So we clocked almost 8% EBITDA margin, and we are looking now moving towards almost a 9% EBITDA margin in that business.
How are you managing the costs, sir? Costs are continuously going down, and now it's become volatile. Some of the costs are coming down. How difficult is it for you to, maintain your pricing or maintain the inventory at an appropriate level?
Yeah, so in our case, the inventories are not for a longer duration. So of course, historically, we have had some inventory losses, which has been now factored and has already come in the results. Going forward, we'll have an advantage on the inventory with input prices coming down. So we are really managing our cost well because we don't keep a long inventory. We don't keep a long inventory. The inventory cycle is pretty much small across all the businesses, and now we will have those benefits on the reduced commodity prices.
Right. So, in terms of the demand, can you just talk to us a little bit more about the demand, especially in the mobile division? That's been one of the key drivers for you, but we're also getting data that smartphone overall in India, demand upside is looking, slightly lower, but with 5G coming in, how would you see that changing?
Yeah, so demand was definitely muted in the first quarter. Clearly, that had an impact on our numbers as well. We were hoping to do so. We did almost 1 million phones for an anchor customer there, and we were hoping to do slightly more. So internal issues, internal ramp up happened to do much higher quantities, but clearly the demand was slightly slow. But my sense is this quarter and the upcoming quarters for an anchor customer, the demand looks okay because a significant portion is still for the export markets. Gradually, the demand in the Indian market will pick up, but as of now, it's not that buoyant right now.
Okay. What about the supply side issue though? Because that seems to be a niggling worry, not just for you, but for many other sectors and companies too. Have things eased at all?
Yeah, supply side, I think so. Things have significantly eased. There were some issues in the month of April where some of the Chinese ports, Chinese cities were closed down. There were delay in shipments, but now those all things are behind us. Clearly, the component prices have come down. There is absolutely no delay in shipments, and the supply situation is absolutely eased. It's now the situation. It's slightly a worry on the demand side, how the demand will pan out, especially coming out of the post-pandemic period, where we are seeing that the people's consumer spending has shifted a bit. Earlier, it was more towards TVs and laptops because people were sitting at home. My sense it is slightly shifted. So there is slightly muted demand what we are seeing on TV side as well as on IT hardware products. But I'm hopeful that this is only temporary and this should come back.
Export orders, are they coming along, and any large order that one needs to look forward to?
Yeah, so there are customer acquisitions across all the verticals. So in LED TV, we are talking to one of the largest brands apart from the existing brands that we have, and also those brands are talking to us to migrate to offer our ODM solutions, our JDM kind of solutions with them. So our design solutions with them. We are talking to more customers, so we are in advanced discussions of closing an agreement with a large customer on IT hardware products for tablets. In refrigerator as a product where we've just started construction, we have already got a commitment of almost 0.6 million from one of the largest brands, and clearly we are creating a capacity of 1.2 million there. So their 0.6 million has already been committed there. And clearly in other verticals as well, if you look at washing machine, we are continuously adding more customers on semi-automatic category, and fully automatic category now also the volumes are increasing. We are adding more customers apart from Bosch, who is an anchor customer. We are in discussion with a large Japanese customer there, large Japanese brand, both for domestic and global markets. So in every vertical, we are adding more customers. In every vertical, there is more and more focus on migration to our own design solutions. And in some of the verticals, there's a plan to get into more and more backward integration as well.
Okay, good to hear that. And thanks as always for taking the time out and speaking with us today, Saurabh.